Okay. Good afternoon. I am pleased to call to order this session, this joint hearing of the Subcommittee on Investigations and Oversight and the Subcommittee on Space and Aeronautics. Our purpose today is to examine the fiscal year 2009 audit of financial operations at the National Aeronautics and Space Administration. NASA's independent auditors, the firm of Ernst Young, decided not to render an opinion on whether the agency's financial documents fairly represented the financial condition of the agency in the last fiscal year. Such disclaimed opinions, they're called, have been very frequent at NASA in the last few years. 17 years ago, the Subcommittee on Investigations and Oversight held a hearing to discuss financial management at NASA. Then NASA had just been placed on the GAO, the Government Accountability Office's high-risk list for their lack of appropriate financial management, for an appropriate financial management system. The bottom line was that NASA could not tell you with confidence what their bottom line was. At that hearing, the subcommittee learned that NASA apparently obligated to spend money without being sure it actually had the money it was spending, which is a violation of the Anti-Deficiency Act. It took about half as long to get to the moon as it has to clean up NASA's financial performance, but after 3 tries, hundreds of millions of dollars, and the hard work of many NASA employees later, they have shown definite improvement. It is hard to take a lot of comfort from a disclaimed opinion. Finding comfort in that is like a student who was not promoted, who took comfort in the fact that they'd come much closer to passing the year before. But in all the circumstances, this really is improvement compared to where it has been. The message is encouraging. The disclaimer of this audit is very different from those NASA received earlier in the decade. Today we are only discussing one material weakness, not 4, and it's one that is kind of understandable. The significant remaining problem is that NASA has been unable to meet accounting requirements for setting an asset value on the shuttle and space station programs. While any material weakness is disappointing and a concern, we have come a long way from the days when NASA could not really say how they were spending their money, what they were spending it on, what they spent, when they'd spent it. We're no longer talking about accountants fixing the records by moving around a few $1 billion and treating that as rounding error to make the books work. We really have the best disclaimed opinion an agency could possibly hope for. So it really is the case that you almost passed your grade this year. And we are fairly confident that next year you will be promoted. And we have more good news. NASA received guidance in October from the Federal Accounting Standards Advisory Board on how to value the shuttle and the space station using estimates of value. That's a glimmer of hope that NASA can produce a valuation that really will pass muster, not be disclaimed by their accounting firm next year. It is my strong desire to see that happen this fiscal year, so that if I see all of you again at this time next year, it will be at a holiday party, not at an oversight hearing. The difficulties in trying to value assets like the space shuttle and the space station, which don't really have a market value. There is nobody who wants to buy a used space shuttle or a used space station, which makes it very hard to use market prices for valuation. There really is a time when the claim that NASA books were just a mess is no longer really true, and that we really do have reason to think that next year's audit will be a clear, clean audit. There are other matters that challenge NASA's accounting operation. I am particularly concerned about the environmental liabilities that Ernst Young mentioned in their report. But I expect all the parties before us today can work together to sustain the program we have, the progress we have seen in NASA's financial management system. And now at this time, I think we've agreed to go chair, ranking member. No, sir. No? Mr. Brown is next. I'm sorry. Chair, ranking member. I now recognize Mr. Brown, Dr. Brown, the ranking member of the Investigations and Oversight Subcommittee.
Thank you, Mr. Chairman. Let me welcome our witnesses here today and congratulate two of you on your new appointments, Dr. Martin, Ms. Martin, and Dr. Robinson. I look forward to working with you in the future, and I do congratulate you on your new appointments. And both of you have your work cut out for you in the future. I'd be remiss if I did not mention the tremendous progress that y'all's predecessors have made. NASA's financial management was in tremendous disarray for many years. The agency is still not out of the woods yet, but the steps taken by your predecessors should obviously be noted, and accolades to them. I hope that our witnesses today will continue that trend, and I look forward to y'all's progress. Problems still remain, however. As Mr. Murrin will detail in his testimony, NASA once again has received a disclaimed opinion, meaning that the independent auditor could not express an opinion on the status of NASA's balance sheets. This is certainly not the first time this has happened. Hopefully that this may be the last, and I sure hope so, just to reiterate what Chairman Miller said. Our committee, GAO, and NASA IG have all followed this issue closely for many years. GAO and the NASA IG have issued a litany of reports over the last 2 decades, and this committee has had several hearings to address the topic. I'm pleased to hear that NASA seems to have been brought in, quote unquote, to a single standardized accounting system rather than the multiple fiefdoms that were present in the past. NASA still faces the daunting task of evaluating property, plant, and equipment. Most notable, the space station, the Space Shuttle, and the International Space Station. While this problem may never be fixed, it may work itself out over time, as the shuttle is planned to retire next year and the space station operations will eventually end as well. Until then, I hope that solutions can be found that both respect appropriate accounting standard as well as real-world realities. I look forward to monitoring y'all's progress and ensuring that NASA handles scarce taxpayer resources in a transparent and accountable manner. Thank you, Mr. Chairman, and I yield back the balance of my time.
Thank you, Dr. Brown. I now recognize the chairwoman of the Subcommittee on Space and Aeronautics, who I'm sure hopes that the financial management at NASA will achieve the standards set by the astronauts. The Honorable Gabrielle Giffords for her opening statement.
Thank you, Mr. Miller, Mr. Chairman. I'd like to as well extend a welcome to our witnesses today. I'm going to keep my comments as short as possible. I, along with other members here of Congress, are very strong supporters of NASA. We believe that NASA is truly the crown jewel of America's R&D efforts. NASA can inspire, can educate, can improve our society throughout a variety of its activities. What we ask NASA to do is very, very difficult. So we want to be careful to make sure that you have the resources that you need. But at the same time, there's a very strong responsibility to the American taxpayer to make sure that the funds being spent by NASA or any other agency is being well spent. We take that responsibility seriously. I do as the chairwoman. I know my colleagues do as well. And that is why the chairman and I have called today's hearings. As many of you already know, NASA recently received the results of its annual independent financial audit. It once again received a disclaimed opinion. Of course, that is not what any of us want to see from NASA. At the same time, it was not a total surprise, since NASA had been receiving disclaimed opinions for most of this decade. Now, that's the bad news, and one of the reasons why we're holding today's hearing. We need to know why NASA received a disclaimed opinion, how NASA can clean up that opinion, and what NASA intends to do to ensure that we're not going to be next year next year to get the same decision. However, I also wanted to hold this hearing because I think it's clear that there's a lot of very good news coming out of NASA. Financial management has definitely improved. It's clear from the auditor's report that the NASA's IG findings have found that NASA has truly made significant improvements over its financial management systems and practices over the last many years. And in short, after almost a decade of serious shortcomings, as mentioned by my colleagues, in NASA's approach to financial management, now you're really coming to very close to closing the books on those problems. So congratulations. It is good news. Before I'd like to close, I would also just like to say that solutions like this to problems in our government don't happen overnight. They happen because of the hard work of some very dedicated government employees. The work that was done under the leadership of the former CFO, Honorable Ronald Spahill, is something that is not widely known and recognized. He persevered in a thankless but ultimately very significant task, and he should take great pride in what he was able to accomplish. Again, we often overlook the work that's been done by so many who work for our government. And Mr. Spahill and his team were tremendous individuals and our own a debt of gratitude. Dr. Robinson, I know that you will continue to build on the progress that's been made to date. And as you assume the duties of the CFO, I know that you will do so with great effectiveness and efficiency. So with that, again, I'd like to welcome our witnesses, and we look forward to your testimony. Thank you.
Thank you, Ms. Giffords.
Mr. Olson.
Yes, right. The chair now recognizes Mr. Olson from Texas, the ranking member of the Space and Aeronautics Subcommittee, for his opening statement, the last of the four.
I'd like to thank the chairs, Chairman Miller, Chairwoman Giffords, and Chairman Brown for hosting this hearing today. Thank you to the witnesses for being here, taking the time to be here, and may I offer a welcome particularly to Mr. Martin and Dr. Robinson. You have extremely critical positions at NASA, and I wish you the best in your new posts. I hope you know that you have folks on these committees and in this Congress who are willing to stand up to make sure that the agency is on the right track to achieve the worthy missions it has and will undertake. Along those lines, I'd like to say in regard to this hearing today that the diligent efforts by NASA over the last several years to get their financial house in order are bearing fruit. And the agency should be commended for the hard work it has done to get us to where we are today. I'd like to especially recognize the work of Ron Spahill and commend him for his services at NASA as a CFO at this time as well. I'm a strong proponent of giving NASA the resources it needs to achieve its goals. While the agency is in desperate needs for funds, we cannot, and frankly should not, advocate for increased taxpayer money unless we are confident that those funds are being spent efficiently, wisely, and with accountability. An agency that is not adequately accountable of taxpayer resources should not be rewarded with increased funding. That is why we are here, talking about this important initiative in any circumstance, but particularly at this time in the agency's history. Thank you for what you've done and what we'll do together on behalf of the nation's spaceflight program. And I yield back my time.
Thank you, Mr. Olson. I ask unanimous consent for all additional opening statements submitted by any member of either subcommittee be included in the record. Without objection, so ordered. It is now my pleasure to introduce our witnesses. Members will be interested to know that Mr. Martin and Dr. Robinson are making their first appearance before our committee or any subcommittee of our committee. And between them, they have 1 month in their new positions. Mr. Paul Martin is the new Inspector General of NASA. I am very pleased to say the words new Inspector General of NASA. He was confirmed by the Senate as the NASA Inspector General on November 20th and previously served as the Deputy Inspector General at the Department of Justice for 6 years, from 2001 to 2003. He was a counselor to the Inspector General and previously was the special counsel to the Inspector General from 1998 to 2001. Earlier, he spent 13 years at the U.S. Sentencing Commission and began his career as a reporter with the Greenville News in Greenville, South Carolina. Accompanying Mr. Martin is Mr. Tom Howard, who has served as Deputy Inspector General at NASA since 2002. He previously worked at the Department of Transportation and the Government Accountability Office. Mr. Dan Murrin is partner in the Assurance and Advisory Business Services Division at Ernst Young. Mr. Murrin has been the primary Ernst Young partner managing the NASA audit team since the company won the independent audit contract in 2004. He served as a professional accounting fellow for 2 years at the Government Accountability Office during passage and initial startup of the Chief Financial Officers Act of 1990. He then resumed his career at Ernst Young in October 1992. He has 30 years total experience relating to public sector auditing issues. And finally, Dr. Elizabeth Robinson is NASA's Chief Financial Officer and was confirmed by the Senate on November 9th of this year. In her previous position, she was the Assistant Deputy for Budget at the Office of Management and Budget. She's also held the post of Deputy Director at the Congressional Budget Office. And early in her career, Dr. Robinson served here on the staff of the Science and Technology Committee, evaluating the Department of Energy programs and policies. And Dr. Robinson, I would have mentioned that you were a former staff member of this committee, even if I had written these introductions myself. As our witnesses should know, you each have 5 minutes for your spoken testimony. Your written testimony will be included in the record for the hearing. When you all have completed your spoken testimony, we will begin with questions. Each member will have 5 minutes to question the panel. It is the practice of this subcommittee, our subcommittee of investigations and oversight, to receive testimony under oath. Do any of you have any objection to taking an oath? The record should reflect that all the witnesses nodded in the negative, that they had no objection. You also have the right to be represented by counsel. Do any of you have counsel here with you? The witnesses all, again, nodded in the negative. Please stand and raise your right hand. Do you swear to tell the truth and nothing but the truth? All right, all the witnesses have now taken the oath, and now I assume that you're being advised of all your rights. You feel relaxed and prepared to talk to us. Let the record show that all these witnesses have taken the oath, and we will start with the inspector, with the first witness, Inspector General Martin. Ms. Martin, you're recognized for 5 minutes.
Thank you, Chairman Miller, Chairwoman Giffords, and ranking members of the committee. At the outset, I'd like to thank you for your warm words of welcome. I can think of no better way to end my 4th day on the job than up here in front of the committee. Thank you for the opportunity to allow us to discuss the fiscal year 2009 audit of NASA's financial statements. With me today is Tom Howard, the Deputy Inspector General at NASA, and the key supervisor at the OIG, who has worked this issue over the last few years. As requested, our written statement that we submitted to the committees addresses 3 main issues. First, the Office of Inspector General's views of the issues identified by Ernst Young, the independent public accounting firm that conducted the audit under contract with the OIG. Second, NASA's progress in remediating its financial management problems. And third, Ernst Young's recommendations to address ongoing issues. By way of background, for most of the past decade, the OIG has identified NASA's need to improve its financial management as one of the agency's most serious performance and management challenges. And to its credit, over the years, NASA has focused considerable effort on resolving long-standing weaknesses in its financial management processes and systems. While the agency has made significant improvements, several key challenges remain, as evidenced by the fact that Ernst & Young disclaimed an opinion on NASA's financial statements again in fiscal year 2009. As was discussed, this disclaimer is based on the auditor's inability to obtain sufficient evidentiary support for the amounts presented in the agency's financial statements. The primary reason for this was NASA's continued inability to accurately value its legacy assets, specifically the Space Shuttle and the International Space Station. Although we recognize that NASA has made significant progress in improving its financial processes and systems, the 2009 audit report identified 3 significant deficiencies in internal controls, one of which is considered a material weakness. Specifically, Ernst & Young reported a material weakness in NASA's controls for ensuring that the value of legacy property, plant, and equipment presented in the financial statement is fairly stated. This means there was a reasonable possibility that internal controls over NASA's legacy assets were insufficient to prevent a material misstatement in the agency's financial statements. The other two internal control deficiencies cited by Ernst Young involved NASA's process for estimating its environmental liabilities and its compliance with the Federal Financial Management Improvement Act of 1996. To help NASA leadership correct these weaknesses, the audit contains a series of recommendations, including that NASA focus on improving its implementation of recent guidance permitting the use of estimates in establishing the value of legacy assets. Through its own initiatives and through discussions with the OIG and Ernst Young, NASA's Office of the Chief Financial Officer is pursuing a series of actions to improve the agency's financial management and address existing weaknesses in internal controls. Most notably, the agency has revised and improved its continuous monitoring program, which helps NASA managers assess, on an ongoing basis, its financial management process and internal controls. This program also helps ensure that balances and activities reported in the agency's financial statements are accurate and complete. As we look to the 2010 fiscal year, NASA is also working to address the valuation of its legacy assets, improve its process for estimating environmental liabilities, and ensure compliance with FFMIA. In closing, we believe that NASA, through effective implementation of the recommendations contained in the 2009 audit report, together with a continued focus on its ongoing monitoring and remediation efforts, should be able to correct the existing weaknesses in its financial management processes and systems during fiscal year 2010. This concludes our oral statement. We'd be pleased to answer your questions.
Thank you. Thank you, Mr. Martin. I understand Mr. Howard is not going to give opening testimony, but yours is his as well, but he's here to answer questions. And Mr. Howard can tell you, if you don't know already, that not all NASA's Inspector Generals have been warmly received by this committee. So we look forward to continuing to receive you warmly. Now recognize Mr. Murrin for 5 minutes.
Turn your microphone on, please.
I'm sorry. Good afternoon, Chairman Miller and Giffords and members of the subcommittees. My name is Daniel Murrin. Thank you for the opportunity to testify before the committee and answer any questions you may have. I'm a partner in Ernst Young LLP, a public accounting firm, and have been in public accounting for over 30 years with a specialty in public sector auditing for the federal government. We've been asked to share with the subcommittees the results of the fiscal year 2009 audit, including the issues identified and our recommendations to correct them. This is our 6th audit of NASA, for which I am the engagement partner. The NASA Office of Inspector General engaged Ernst Young to conduct the audits of NASA's financial statements for fiscal years 2004 through 2009. Our testimony today will focus on our fiscal year 2009 audit. As you're aware, Ernst Young issued a disclaimed opinion with respect to NASA's September 30, 2009 financial statements. Concurrent with the issuance of our audit report, we issued a report on internal controls which detailed 1 material weakness and 2 significant deficiencies, with 8 recommendations to assist NASA in addressing internal control deficiencies. We also issued a report on compliance with laws and regulations and cited noncompliance with the Federal Financial Management Improvement Act. In my oral testimony today, I'll give a brief overview of each report with a particular focus on a disclaimed opinion and the related recommendations. My written testimony goes into greater detail for your reference. Let me first discuss the report of independent auditors. The reasons to disclaim on these financial statements for fiscal year 2009 really flow from the property, plant, and equipment, PP&E, and the related issues, which really have been a long-standing concern for NASA, and relate principally to assets that are capitalized in prior years which were not susceptible to audit. Those matters are reported as a material weakness in our report on internal control. Progress has been made by NASA in revising its policies, and NASA has gained a deeper understanding of the components and its costs of capitalized assets. The adoption in FY 2010 of the Statement of Federal Financial Accounting Standards number 35 regarding estimating the historical cost of governmental PP&E provides a unique opportunity for NASA to address the legacy valuation issues which have impaired its ability to prepare auditable financial statements. In our report on internal controls, we made 2 recommendations. The first recommendation is that NASA continue to improve implementation of the new standard. Areas for particular focus included the appropriate approaches in critically assessing prior recorded amounts for legacy assets when the initial documentation to support those amounts is not available, and the extent to which the entity must associate ongoing outlays with individual items of PP&E versus recording amounts based on contractor provided estimates in bulk. The second recommendation is really that NASA develop an overarching key control activity that provides for a robust and rigorous review that both validates and challenges the adequacy of the estimation techniques used and the sufficiency of the documentation supporting those conclusions. The shuttle program is currently scheduled for decommissioning in fiscal year 2010. The ISS is also nearing the end of its initially estimated useful life. The gradual reduction in the relative materiality of those assets, combined with the flexibility provided for the new standard, are expected by management to help resolve the long-standing issues and barriers to a clean opinion. Ernst Young issued a report on internal control documenting 1 material weakness discussed above, and also 2 significant deficiencies. This first significant deficiency relates to NASA's environmental liability and the need to continue enhancement of that area, and I'd be pleased to discuss that further as appropriate. And the second significant deficiency, which again is a modified repeat condition related to NASA's financial systems not being substantially compliant with FFMIA. While I've been asked to really address the issues and recommendations in my testimony today, I would like to take a minute to note that substantial improvements have been made in managing the business of NASA. Since our audit of 2004, and certainly the financial management issues that have been worked through systemically by prior groups of CFOs and OIGs, have made progress, and we do note that progress. Thank you, and I'll be pleased to answer any questions you may have.
Thank you, Mr. Murrin. Dr. Robinson is recognized for 5 minutes.
Thank you. Chairs Miller and Giffords and Ranking Members Brown and Olson and members of the committee, subcommittees. Good afternoon, and thanks for the opportunity to appear today. Before I begin my remarks, I'd like to recognize 2 of the leaders from the CFO office who, along with many at NASA, have been doing all the hard work that has been recognized today and produced all the good results. The Deputy CFO, Terry Bowie, and the Associate Deputy CFO, Bruce Ward, and there are many others, too. It's been a group effort. Today I'd like to briefly outline 3 points, many of which have already been discussed, but the first one is the progress that NASA has made and what we've done over the last several years, to explain the 1 remaining material weakness, and then to describe NASA's path forward. As everyone here today has noted, NASA has made significant progress in improving its financial processes and systems. There's a chart in my written testimony, but it shows that the last time we had a clean opinion was back in 2002, but then in 2003, NASA took the bold step of trying to consolidate all of the financial systems of its 10 centers and headquarters into 1. But then systems and data issues caused some serious problems and resulted in the first of what have now been 7 disclaimed opinions. Since that time, though, systems improvements, data cleanup initiatives, policies and process changes, a lot of staff training and development have helped to eliminate all of the material weaknesses except for 1, related to legacy property, plant, and equipment, or what people in the business call PP&E. You've also heard that we have 2 significant deficiencies, not material ones, but significant ones, related to NASA's environmental liability and compliance with the Federal Financial Management Improvement Act. For both items, NASA has plans in place to remediate the deficiencies. And before turning back to why the remaining material weakness continues to challenge the agency, I do want to assure the committee that today, using current systems and processes, NASA is able to track and control its funds, account for the costs related to individual programs and projects, and manage the agency's day-to-day operations. While accounting for the agency's legacy PP&E is an important financial statement issue, it does not impact the day-to-day and year-to-year operational decision-making at NASA. So now to the second point, explaining the material weakness. NASA's legacy PP&E, particularly in relation to the space station and shuttles, has been a challenge for the agency back to when the federal accounting standards for space exploration equipment were established in 1996. At that time, federal standards required that such equipment be fully expensed in the year where the costs were incurred, and NASA complied with those requirements. Then in 1998, the standards were significantly changed to require that costs for such equipment, and for NASA, the shuttle and station, be tracked as individual assets and then not expensed when incurred as program costs, and that those costs be depreciated or expensed over a specified number of years. Now, NASA's processes and contracts were designed to comply with annual expense accounting requirements, not the new requirement for asset depreciation accounting, and consequently, NASA does not have the historical records necessary to support individual asset balances for the ISS and shuttles. Since 2002, when NASA received its last unqualified opinion, the agency has implemented significant changes to meet the revised accounting standards on a going-forward basis, but none of those efforts can recreate records that did not exist prior to 2003. The station and shuttle had together a total net book value of approximately $9 billion at the end of the fiscal year, comprising about 77% of the total PP&E and 38% of total assets. Due to the size of the balances, the auditors have determined that NASA's lack of support for these asset balances resulted in insufficient evidential support for them to complete their audit, and hence the disclaimed opinion. It's important to note, as has been stated before, that the space station and shuttle are scheduled for retirement in the coming years, and continued depreciation of these assets is bringing the net asset balances on the balance sheet to levels that will become immaterial to financial statements. While the International Space Station depreciation schedule naturally leads to 2016 as an outside date for resolving all these issues, NASA has been working to achieve a timelier yet still cost-efficient and effective solution. And so to the final point, what is the prognosis going forward? As the Chair mentioned, the FASAB, the Federal Financial Accounting Standards Advisory Board, on October 14th published a new standard for the kinds of assets like the shuttle and ISS. The standard amends the existing accounting standards to clarify that reasonable methods of estimating historical cost and accumulated depreciation may be used to value general PP&E. This is important to NASA because it provides a way forward. And as FASAB notes in the standard, the use of estimates is a more cost-effective means of valuing certain assets than reconstructing the history. As recommended by the auditor, NASA will adopt the amended standards, but because the new standard does not provide a single specific method, implementation will require some collaboration amongst all of us to implement correctly. And so in closing, I'd like to reemphasize that NASA takes seriously the need to resolve its financial weakness and to continue to take the necessary steps to do so. And we recognize the need to work with everyone at this table and others. But I also want to emphasize that NASA's financial systems are, on a day-to-day basis, an annual basis, very strong and can track all of the needed financial data for the agency's important decision-making. So thank you, and I look forward to hearing your questions. Thanks.
Thank you, Dr. Robinson. We will now have questions. Our first round, it may be our only round. I now recognize myself for 5 minutes. Mr. Murrin, Dr. Robinson mentioned that FASAB has now issued guidance for how to value legacy assets. Obviously, NASA is not the only agency that has a problem like this. The Defense Department is the other obvious example, although there might be willing buyers for some of what the Defense Department has. They're not necessarily anyone that we want to sell that stuff to. Have you looked at those standards? Do they seem workable? Do they seem to would they get NASA in compliance?
Well, the standards themselves are really quite brief and provide really a summary of how to do it. It's really the devil is going to be in the details of how NASA, DOD, and the other agencies work together to come up with what reasonable approaches are. I think that Dr. Robinson had the right track of just saying that the agencies and their auditors are going to need to work together to really cooperate to figure out what is enough. We don't want to overexpend resources in pursuit of this and getting down to minute detail, particularly since FASAB has spoken on this issue. But there is not a cookbook as yet to implement this standard. The standard became effective in October, so we don't have a series of agencies that have actually implemented it as yet.
Okay. Have you taken even a preliminary look at, or do you have the data, the information upon which to take a preliminary look at how the FASAB standards what valuation they might lead to with respect to the space shuttle and the space station?
Well, the agency actually has done that. They have a series of materials that were pulled together in the summer of 2009 that were intended to develop an estimate under that new standard, were the standard applicable in 2009. We have begun our process, along with the Office of Inspector General, to look at that information and how it might apply for 2010.
Okay. Mr. Martin, obviously all of you have a great desire to get this worked out, and you want to maintain the independence of your auditor, but it does appear that one approach to the immediate problem might be to ask the auditor to kind of revise or take a second look at this year's valuations based upon the new FASAB standards. Have you considered doing that? Is that something you might do?
I'd have to actually speak with Dan and with Tom, but I think we've just kicked off the FY 2010 audit review, and I'm not sure they've gotten to that level of detail yet. That is certainly one approach that we can look into at the outset.
Okay. Mr. Murrin, with the benefit now of the FASAB guidance for legacy assets, do you feel reasonably confident that next year's audit will not have a qualification to it, will not have an asterisk? It will be a clean audit, or can be?
Yes, somewhat regrettably, I get that kind of a question just about every year from every client at one point or another. And we really can't prejudge what the outcome of a particular year's audit process is. Okay. I would say that the situation here, where FASAB has developed a document that should be helpful to NASA in assisting in resolving this, and FASAB developed that document, at least with NASA and DoD and some of these other entities in mind as they develop the standard, certainly is a helpful thing that should help in this process, but I can't prejudge the answer for it.
Okay. Perhaps you should have, you missed your calling perhaps, so you could have become a lawyer. Your answer, I think, was it depends. But perhaps that's an accountant's ultimate answer for everything as well. But with respect to the specific problem, assuming that there are no new problems, does applying the new FASAB guidance with the presumed cooperation, does that give you confidence that whatever new problems may arise, that problem can be solved?
The two recommendations we have, which were reasonably specific in providing a roadmap on how one might apply the FASAB 35 guidance and addressing some of the contractor-held property issues, those recommendations, I think, do provide a roadmap, and if NASA cooperatively working together with us sort of talks through what we have in mind there, I think there are certainly opportunities for them to have improved outcome.
Okay, so the answer is it still depends. And my time has expired. I now recognize Dr. Brown for 5 minutes.
Thank you, Mr. Chairman. I'd like to ask the panel, are there any risks to using estimates or any impediments to using estimates instead of real numbers for determining legacy asset value? Start with Mr. Murrin. And then Dr. Robinson, anybody else wants to pipe in.
I think in the context of NASA's operations and the items that we're principally speaking about, legacy assets, the shuttle and the space station, relatively less risks involved in that. Do we really need to know exactly what the invoiced amounts were versus having range of estimates that is a reasonable estimate for those assets? depending on the assets that you have, I think there may be more of a risk involved in developing and using estimates, but certainly for the two particular assets that are most of the focus of this, relatively less.
Impediments to making an estimate reasonable, picking a number, et cetera, to try to get something that Dr. Robinson can work with and that you can work with in the future?
Probably the principal impediment is that the first shot at the estimate is going to be the recorded amounts, because those are the amounts that were recorded in the records over the years. But unfortunately, the records to support the amounts that went into the estimates are not available anymore either. So is the estimate based on a number that was not supported any better than the number that was not originally supported, just because now you can call it an estimate? So that would be the impediment. So I think that's where, if you look at our recommendation, we're really looking for whether there are things that can corroborate the amount that's been recorded, whether it's the amount that was budgeted in each of those years that can somehow get compared to what got capitalized, or some other second item that can help corroborate it, so that we're not just saying, well, now it's an estimate, we don't really have to audit it, because that's not really what happens. We do still have to audit it.
So from what I'm gathering from what you're telling us is that basically there's no way to truly clear this up until we retire the assets. Is that correct?
Well, I don't think so. I think the estimation process does hold some promise, and certainly FASAB speaking on this matter and reinforcing that estimates are acceptable, gives some comfort to say that FASAB is not looking for an exact number here for these assets. Certainly retiring them would definitively resolve it, but short of that, it is possible to get some corroborating evidence to say that the amounts that are there are reasonable.
Dr. Robinson?
I agree with much of what Mr. Murrin said. The one thing I would add here is that in the course of this long trial on constructing the station and trying to record the costs, we also had a change in auditor. And so one of the numbers that we're talking about was actually approved in our previous audit, the one where we had a clean opinion. And so they did do an evaluation and came up with a number, and we've been relying on that as our previous auditors. But as Mr. Murrin points out, a lot of the documentation and other things were with them, and now they're no longer our auditors. So this tale has gone on for so many years that there's so many twists and turns that it's really hard to nail down every single one. On the other hand, the shuttle and station are things. We are trying to value an asset. It may not have a market value, but the components are identifiable and recognizable. And so there certainly is an ability to be sure that we have it about right. And so I think it's not just that we look at the invoice cost, but we can also look at at what has been built and make sure that we're in the right ballpark.
All right, Mr. Chairman, my time's about expired, so I will yield back. Thank you, sir.
Thank you. I now recognize the other chair, Ms. Giffords.
Thank you,
for 5 minutes.
Yeah, thank you, Mr. Chairman. Dr. Robinson and Mr. Martin, obviously a financial management system should tell us how much money NASA has. It should tell us where the money is flowing in and how the money is being spent. With the system right now, can we get those answers and can we trust them?
Yes.
Mr. Martin?
I believe so on a day-to-day basis, yes.
Yes. Mr. Howard?
Yes, ma'am, you can.
And Mr. Murrin, do you believe that NASA is in a position now that is able to answer those questions?
Unfortunately, I'll get to do the lawyerly thing. We do end up having to speak as a firm through our reports and the public documents. And to the extent that we are disclaiming opinion, that's because under the professional standards, given the size of the PP&E matter, we're not in a position to give a piecemeal opinion and opine on the rest of the financial statements. And therefore, really, I'm not in a position to answer that definitively.
Thank you. The past is the past, and we've obviously spent some time talking about where the agencies come from and where we are today. We've spent some years trying to get some answers to the value of Space Shuttle and the International Space Station, and a lot of it goes back to the accounting system in the 1970s and the 1980s and how it didn't exactly capture the actual cost information called for by government accounting rules. Are we in better shape to meet those accounting requirements for the assets that NASA has today and is currently developing?
I think so. It is now standard practice in our contracts to require the accounting information that we need, and we don't anticipate problems going forward beyond the fact that many of these systems are very large and are just difficult to value in terms of the entire numbers. But we will have the data in order to do it.
Dr. Robertson, what assurances can you give to members of Congress that this is actually going to take place, and that we can know that we can take this information and be very satisfied that we're getting the correct information?
Well, I think that NASA, even over the last couple of years, has demonstrated that it can produce auditable financial transactions, can appreciate assets and expense its contracts and grants according to guidance. We do not believe that there are large problems, and I think our contractors would agree with that. They have felt the burden of giving us all of the data and have worked very closely with us to make sure it is the right data and what we need. So the proof will always be in the pudding. We're going to be audited every year, so we'll see. But we feel like we're on a strong footing.
And are there benchmarks that we should look for here in the Congress?
Well, it's when you look at the financial data, when you talk about money at NASA, you talk about the financial reports, but you're also talking about the budgetary estimates, and you're talking about the program cost and schedule estimates, and all of that data goes into real confidence about whether or not an entity has control of its day-to-day operations. It's not just the financial transactions. And so I think that there has been a lot of work that's been done by the IG's office and others, and very much so within NASA, to try to beef up all of those parts of the financial enterprise, in particular to improve our joint cost and schedule estimates, to baseline programs and hold them accountable for that. And so I think we've seen improvements sort of across the board on all aspects of money at NASA.
Mr. Martin, would you care to comment?
To your specific point on assets, at the beginning of fiscal year 2008, NASA implemented a new system for all other assets that it's acquiring besides the shuttle and the station. We've taken a look at that. Ernst Young has taken a look at it. We think it positions the agency to be able to accurately report the value of assets going forward.
Okay. Thank you. Mr. Chairman, I see I'm almost out of time. I appreciate the time.
Thank you, Ms. Giffords. Ms. Giffords yields back. Mr. Olson is recognized for 5 minutes.
Well, thank you very much, Mr. Chairman. And I'd like to talk a little bit, ask questions about legacy systems, probably directed to Mr. Martin and Dr. Robinson, but anybody, if you want to chime in and give an answer, feel free to do so. But with regard to the material weaknesses in NASA's controls for assuring that the value of legacy property, plant, and equipment, notably Space Shuttle and ISS, is fairly stated, all of you have testified that the upcoming retirement of the shuttle and the write-off of the space station will largely resolve the problem. Are there other, albeit smaller, legacy issues that are still haunting NASA? And if so, how can they be dealt with? Dr. Robinson?
Well, I am going to plead a little ignorance here, since I have only been at the job for 3 weeks, but I have asked those questions about what are the kinds of things coming down the road, and really in terms of our portfolio of assets, the shuttle and station are even different among that very unique set. We have a lot of highly specialized research satellites and other things which don't trigger these kinds of requirements. They're much more simple from an accounting perspective. And so I don't see it, but on the other hand, I've only been here 3 weeks, so I haven't learned everything.
Just Mr. Howard, I don't want to take you, kind of read something in your actions there, Mr. Martin, but it looks like, Mr. Howard, you want to say something. And
My legacy goes back 3
Four.
days. So I'm going to look to Tom.
Great, thank you. Mr. Howard.
The two assets that we talked about are the principal ones, and there may be some others that are associated with the contractors who are building things and some of the property that's happened. But for the most part, the focus is on the shuttle and the International Space Station. And if the agency can get those resolved, that's the bulk of the problem.
Thank you very much for that answer. And another question just involving the costs to NASA of compliance. In the past 20 years, how much money has NASA spent to bring it into compliance with federal accounting standards? And is that you, Mr. Howard, again?
I'd have to defer to the agency for an accurate answer on that.
Yeah, we'll take that question for the record, but I will tell you it is a not insignificant sum, and that would be true for all agencies as they have built financial systems.
Thank you for that answer. You kind of read my mind there, and I appreciate a statement for the record. Looking ahead, what is your assessment about the cost curve for NASA to sustain this effort? Do you think the agency needs to continue heavy investing, or is it at a point now where growth in spending on financial management and systems and personnel can begin to flatten out?
Okay. Yeah. From our perspective, I would say it's the latter, that the agency has been implementing this current system for 7 years now, and it's at the point where it's working effectively. So we should be at a point where it can begin to flatten out.
Okay.
I would say that we have some milestones coming up where we will be integrating our real property systems in. So we still have a number of things, but albeit in the near future, not the long future. And then, of course, we have to maintain quite a lot of vigilance. No system's going to produce great numbers. People have to create great numbers to put in the system. So we'll have to continue that.
Dr. Robertson, thank you for that answer. Mr. Howard, thank you. Mr. Martin, thank you for your time. Mr. Murrin, thank you. I greatly appreciate everything. And I know coming up here after, 3 weeks, 4 days, really, really appreciate you coming here and testifying today. Thank you very much. I yield back my time.
Thank you, Mr. Olson. By far the most conscientious member of the I&O subcommittee, Ms. Dowkemper, is recognized for 5 minutes.
Well, thank you for that endorsement, Mr. Chairman. Thank you, witnesses, for being here today. Chairman Miller, in the beginning, said that we don't want to return next year with the same material weakness, and I'd just like to extend his remarks by saying that I don't want to come back here next year and find we have new material weakness. Mr. Murrin, you noted in the report that NASA wasn't able to provide its estimates for environmental liability costs with sufficient time to support the audit process. Am I right in reading this to say that we don't have the same depth of understanding on this problem that we do on the material weakness we've been discussing?
I do think that the record for last year shows some progress by the agency in their environmental liabilities. To some extent, it was work that was done at the last minute to get a comment behind them. So a lot of things that were done in July, August, September, literally getting some things to us the last week in September to be able to say, well, we have a balance now. Here it is. Unfortunately, in a multi-billion-dollar entity, getting a number on the last day of the year is not sufficient time in which to actually go in and have the firm develop the work that we would need to do to stand behind that number as well and opine on that number. So it's a situation in which we think that if they work through the 4 recommendations we have there, they should be able to make continued progress as well and get to the point where we're not talking about those numbers being materially misstated and are in a position to think anyway that they're, if not a material weakness, perhaps no longer a significant deficiency, but they certainly constituted a significant deficiency this year.
Thank you for that. Given the severe time constraints and resource limitations you mentioned in your testimony, should our committee be confident that $922 million is a well-grounded estimate of NASA's environmental liabilities?
Well, we don't as a firm opine on individual elements of the financial statements, but the comment that we're making about the significant deficiency for environmental liability, is an indicator that we think that more work by the agency can be done around its environmental liabilities, and it wouldn't be entirely surprising to have that number move as the agency further refines its process for estimating environmental liabilities, and we do our audit work around those estimates to verify whether they're appropriate or not.
Okay. Dr. Robinson, your testimony doesn't describe steps to deal with the incomplete training for staff working on the liability estimates or the fixes needed in the estimating software described in the Ernst Young reports. Can you describe for us how the what kind of corrective actions you'll be pursuing on that?
Well, in cooperation with the Environmental Management Office at NASA, I think there's a real commitment there to train the staff, to improve their estimates. This is, if you look across government at agencies trying to deal with environmental liabilities, there are a few who have very different liabilities than others. DOE and NASA particularly have nuclear liabilities. We have DOD, and we have a lot that are associated with fuel and operating systems. And so I think there's been a lot of effort over the last 10 years to try to develop acceptable methodologies and models to do that. And this is not just work that's going on at NASA; it's going on everywhere to try to perfect these estimates. And so I do think our Environmental Management Office is very keen in producing the best ones possible. And then in the federal government, you report it many times. You report for the budget, you report for the financial report, for all that, and getting every office in a large agency like NASA to produce numbers at the right time, it's a big effort. And so, but I do think the Environmental Management Office and NASA as a whole is there now. And we do expect to get much more timely information from them.
So then you expect that you'll be able to do that, then you'll be able to get the corrective actions done that you need to.
Mm-hmm. Definitely.
Okay. Well, I just want to close by reiterating, that what Chairman Miller has said, and I just hope that NASA gets its financial accounting system into the best shape possible, that we want transparency. And I look forward to not having to have this discussion next year. So thank you very much for your time. I yield back.
Thank you, Ms. Dahlkemper. That ends the questioning. I don't think we will have a second round, but I was... staff points out I needed a clearer answer to one of my earlier questions. I think one extension of Southern politeness is a tendency towards indirection. We also have the highest murder rate in the nation, so sometimes it doesn't work as well as it. Mr. Martin, will you ask Ernst Young, your auditor, to apply the new FASAB guidance for valuing legacy assets for 2009 for the space shuttle and the space station, the significant assets that cause the qualified, the not clean audit? It's obviously work you're going to have to do again next year. I understand Mr. Murrin doesn't want to commit to what kind of audit he will give, what kind of report they'll give next year, but will you ask them to look at those assets again and work with all the folks that you need to work with to apply the new guidance to try to come up with an acceptable valuation for those assets?
We will certainly work hand in glove with NASA and with Ernst & Young. But, Tom, correct me if I'm wrong, I think the burden is on Dr. Robinson and her shop to do the initial estimations, again, working with the accounting firm and with the OIG.
Okay, Doctor.
We certainly pledge to work together toward that end. We have? Good.
Well, it's not entirely clear exactly who's got to ask who to do what.
Go ahead.
But Mr. Howard, Mr. Martin, will you tell Ms. Robinson what she needs to know? Ms. Robinson, will you commit?
Yeah, but again, before I got there, but the agency, I think, did yeoman's work to try to make all of the adjustments in the 2009. So we believe we've done it and we're ready to be evaluated.
For 2009.
We're ready to be. We're ready to be evaluated for the new estimation methodology, and all the adjustments have been made already to the legacy assets, and so we could start now to value them under the new FASAB standard and work on that in the next couple months.
Okay, well, will everyone here commit to do that? Mr. Barton, Mr.
Yes,
Howard.
Yes, sir. We have, and as Dr. Robinson said, the agency began the process last year. That Ernst Young is going to take a look at that as part of the 2010 audit. The Office of Inspector General is going to take a look at it as part of the 2010 audit. We're not asking them to go back and revisit the 2009. The standard was approved in October of 2009. It is not retroactive to fiscal year 2009. So we're applying it to fiscal year 2010.
Right. But you got, you didn't pass your grade. You got held back.
Right.
We'll think of this as summer school. Will you ask them, provide all the information necessary, ask them to value the assets based upon the FASAB guidance that you now have, even though the books are now closed? That's obviously work you'll have to do again for the 2010 audit. I know the books are closed. I know that the audit's in, but do it anyway. Will you do it anyway?
No, sir, not for 2009. We're focused on 2010 now and going forward.
I think the
Ms. Robinson?
distinction here
Dr.
is that
Robinson.
these are legacy assets.
Right.
And so the valuation and the corrections to them they don't change every year. And so I think the issue here is that I think the chairman is asking is, can we get an early read so that we don't wait till the end of the audit, so that in the next couple months we get a read on whether or not we've made all the appropriate adjustments, so that, and if we haven't, we can then work on it, but we're not going to wait until next fall to know whether or not we have to come back up here.
What she said.
Sir, yes, we've already talked, Mr. Murrin, myself, and Dr. Robinson's deputy, Mr. Bowie, have talked about doing exactly that, sitting down, looking at what the agency has done to date, having a good discussion about what's good about it and what can be improved about it, and making specific recommendations so that the adjustments can be made timely if there needs to be additional adjustments.
Okay. That sounds like as close a commitment as we're going to get. And with that, before bringing the hearing to a close, I want to thank all of our witnesses for testifying before our subcommittees today. Under the rules of the committee, the record will remain open for 2 weeks for additional statements from the members for answers to any follow-up questions the subcommittee may have for the witnesses, subcommittees may have for the witnesses. The witnesses are excused. The hearing is now adjourned.